Buddy, it's April 8th and it's a Wednesday, which means only one thing could have happened yesterday based on history. It was Tuesday, and you know what Tuesday means. Well, I guess victory? I don't know what's even happening anymore. We live in a very odd simulation. But right now the S&P 500 is just absolutely roaring, and this is going to be a little bit of a different show because I'm going to take you behind some of the stuff that we saw leading up to this that I think is very critical in terms of momentum and understanding where institutional action was in the last 48 hours before this event really even transpired. And that's very, very critical to consider because the positioning was all there in front of us. And this is a core lesson for us as we now visually see data in new ways that we haven't seen. But as you can see, S&P 500 futures pushing to 6833, the Dow above 48,000, the Nasdaq back above 25. The Russell continues to roar, and the clues really were in the Russell in recent days. I'm going to break that down in a moment, but the US dollar absolutely got rugged. You see this pullback 98.5. We were just above 100. This is a monstrous pullback, and we're seeing the euro rally. We're seeing the yen bounce. We're seeing virtually every other currency getting a bid, including Bitcoin now pushing toward 72,000. And yes, I did call it a currency, but it's really more of a liquidity proxy than anything else. This is getting a bid on the backside of weaker dollar, stronger collateral chains, the plumbing of finance suddenly getting a boost that was much needed. And as I've talked about in recent weeks, you see what's going on with WTI and Brent. This was the big thing that we were concerned about, is that you saw the OIOU pull back the way it did earlier this week. The other thing that was very, very critical about this was that so many traders globally on the energy side did not want to find themselves in this situation. And that situation was one headline and you see a 16% move in WTI. That's exactly what has happened. The thing that we'll talk about in this presentation in a moment is the fact, morning show presentation. I'm not selling you anything. The thing that really matters in this situation is that Brent crude at the spot price had pushed above 150 yesterday. So massive, massive divergence between futures and spot. And now we're going to continue to witness and try to get a better sense of what comes next. I do want to point out before we get there that we do the capital wave. We talk about this all the time with our readers at Money Printer Pro. And the Russell was very green yesterday. We saw a big move into that yellow-green territory on the Russell. The weekly numbers had confirmed, pushed higher yesterday. And the thing that really matters here is that the S&P 500's back. NASDAQ's technically back. But if we go back into this screener, two things are very critical about this. First off, Monday, we saw technology stocks get their bid. So there was a lot of institutional capital effectively betting that this was going to happen, that this was going, this peace deal or this at least 2 week situation was going to be announced. There was a lot of institutional capital that came in last week based on Q1, end of Q1. We saw a significant, weakness in energy that had been persisting and had been building. And now here we are. And now as we look at score trends and we go into our breakdown, key thing here, this is down in our conviction pulse. We already have a positive 8 on a daily move for the S&P 500 on momentum, and our weighted score is plus 20. So this is very positive for now. I don't have a lot of terrible things to say, but this is a relief rally. The other thing to note, healthcare had already been making significant moves in recent days. That was all showing up on our screeners and our screener side. On the weakness side, what I will point out, which I think is still important, on the crasher side, only 11 of these names. Pay very close attention here because it's telling us that a lot of other challenges are still persistent. Even though you have this positive news, we already had technology stocks leading this Monday and Tuesday, and now they get the big bid that comes in today. Further momentum, Seagate continuing to run, Intel continuing to run. These were already breakout names yesterday before this news. Now, the question is how high and how quickly can these move? But on the crasher side, I will note Nike is still weak. You're seeing Campbell Soup still in breakdown territory. That's the consumer defensive side that we continue to remain cautious about. Raymond James remains under pressure. That's that AI story on the impact of the brokerages. You're also seeing some of the financials and insurance, and you're also seeing names in real estate because there still are concerns about the refinancing that needs to be done. All of those stories are still there. They're just pushed to the back page for now. We kind of wait. We're going to see how high this could squeeze. And that's the question that a lot of people are going to ask me right now. I'm going to tell you it's pretty simple. It can go until it goes into overbought. So we talked about these lines yesterday and Monday. We talked about the importance of the 20-day moving average, the equilibrium that we saw in momentum, and significant amounts of activity that was suggesting that, well, institutions were ready to bet that the bottom was in last week. The other thing that I will note, and I talk about this regularly, you have to keep an eye on the MACD. The MACD turning positive back here on April 2nd. Happy birthday to me. You saw the positive news here on the RSI. My recommendation now is to watch this RSI on the daily. There could be a hated rally that takes us up into that 685, 690 level for the SPY. That can potentially take us to overbought, and that's where that's where the narrative will probably shift once again. We are in a headline-driven environment. It is a very difficult market to trade. That's why we continue to focus on momentum, continue to focus on the signals. Wish that the capital wave would have gone positive on the S&P 500. We didn't have that yesterday. We were stuck in divergence, but the Russell did provide a little bit of clues into what to expect. The high conviction names that are just continuing to rock and roll right now. UNH has been there for 2 days. We saw Intel. We are now also seeing 5F. Dell, Fox is on that list as well. Fox Corporation, SanDisk. These are just high, heavy momentum stocks at the moment. We'll see if that momentum can hold today, and we'll also move over real quick to just showcase what we have on the conviction engine. These are now the most positive momentum stocks in the S&P 500. You're going to see significant amounts of technology names. A lot of these names have been there for a couple of days. EA, Intel, Dell, etc. Where is the weakness in the market? The market that's continuing to persist. It's all the same problems that we had noted. Consumer cyclical, concerns around DoorDash and Chipotle. We've talked about what's going on with the private capital and private credit. It's all still there, but this stuff can just get a little bit of a relief rally based on what we're seeing. Company like Intuit, again, technology software, questions there. And of course, what's going on in the insurance space. So this is currently an environment where headlines and relief and capital coming in all of the same time. It's just important to note that all of these problems still persist, but for right now, the relief rally is at the top of the chain, and the top of the chain is in what's happening with tech. We have earnings kicking off, obviously, with DAL today. Delta is getting a huge move, largely on the back of relief around oil. Now, here is the morning bird. Let's just talk real briefly about what is happening. Very exciting. And I have to shift some things out. All right. So the big headline is, of course, that we saw a ceasefire last night. The B-52s were in the air. They had taken off. They were planning a 7-hour flight. And 2 hours before that, there was, well, a ceasefire. Not a deal, not a treaty, nothing but a 2-week time out. And once again, this is a reminder. People are going to say, well, what happens if there's another bombing? What happens if there's another escalation? Well, we go from there. That's kind of where we sit right now in this environment. This is just how it is. The market was looking for a reason to get off the mat. It got off the mat, right? We did see insider buying on SEC Form 4 documents push to high levels on March 30th, 31st, but the dollar amount was not in there. It was just a lot of volume that was happening. Sometimes that's enough, but it wasn't a huge clue. And again, we are operating in an environment we have never operated in before. So if people are sitting here saying, well, I feel like I missed something, you really didn't, because you probably don't want to have that feeling that you're gambling instead of investing, or that you're gambling instead of trading. And that's kind of the way that this has felt over the last couple of weeks. Yesterday, I talked about the fact that Ed Yardeni and HSBC had said the bottom is in, and I was listening to that. But you still had that feeling inside that, if you make a bet right now and that bet goes wrong, it's all going to evaporate because the volatility was elevated and we kind of were in one of these two extremes. Now, this is the diplomatic equivalent of both sides saying, I'm not mad, I just need some space. Is it over? We don't know. But as I've talked about, there was a person, I've been talking about wargaming for the last 2 weeks. There was a guy who did wargaming for the Obama administration who came out, did a Substack that came out this week. And he noted, number one thing that I talked about, rationality might not be the wrong term. It's just that every time that Iran acts threatened or feels threatened, they escalate. And that is exactly the point that I've been trying to make. They hit the no button when it comes to answers. They may be playing from the weaker side of the negotiation table, but they always escalate. And that was pointed out by the Obama administration's former game theorists who were assessing what this looks like. The question is, right now, is this going to be enough to create a sustainable environment? And on top of this, we go out 2 weeks from now, right? We still are likely not going to see the Strait of Hormuz back at full capacity. We're not going to see a lot of those refineries, a lot of those natural gas plants. All of that stuff's still going to be offline. Desalinization plants, Rosslafen, all of these things are still offline. So this relief rally that we're seeing right now, it is exactly that term, relief, right? Every risk asset on earth is celebrating. Every oil bull is updating their resume. We talked about the OILU and the breakdown of that recently. That was a key warning sign of, where we sit today. This move to here was basically a lot of people got shaken out on upstream oil and gas. And I said, like, that's probably the better place unless you break back above that 8-day. We never really sustained above that 8-day moving average. So now OILU going in the opposite direction, CTA's dumping. You're seeing a lot of funds. Anybody who was speculating on higher oil prices are now currently waiting for the open so that they can try to get whatever they can out of this market. It was a huge gamble. And it's a reminder that's exactly what it was. It was a gamble. So markets don't care about nuance. They just care that the bombing is stopped for 14 days. The Strait just went from crisis premium to maybe calming down a little bit. But oil is the big story. Huge moves down. WTI down $18. Brent down $15. And I will note that physical Brent had pushed in the North Sea 40s at about 146. We saw in the Middle East above 150. Physical spot was trading near that as refineries were panicked because they needed barrels. Then a ceasefire hit and the risk premium got hosed off the chart from 150 spot to sub 95 futures in one overnight session. Futures are sending it. Everything's moving up. We see that. Obviously, the Russell at 2653. I will note that in the background of all of this, the Federal Reserve has been injecting $40 billion a month. We're going to see how this carries out through Third Friday and through the end of the tax season. The Treasury General account obviously will be starting to swell up once again. And now we actually are going to have to go back to having conversations, hopefully, about the real issues in the plumbing in the markets, right? Which includes what's happening with private credit, what's happening with reserves, what's happening with what this world looks like in 6 months with all of these refineries and all of these other institutions offline. Oh, and also SpaceX potentially sucking a massive amount of money out of the market in order to fund that IPO. When everyone's hedge gets ripped in half, this is why I always tell people to watch these three tickers. The FNGD has fallen 12% today. The FNGD is that tool that we watch to get a better sense of what is happening with leverage and what large institutions are doing. And as you could see, the FNGD was under its 20-day moving average 2 days ago. 2 days ago. The FNGD down 2 days ago, which means the inverse bull or the bullish ETF around this pushed above the 20-day moving average yesterday. Okay. Signaling once again that institutional capital was betting on exactly what we saw happen last night. This momentum is significant. Now, obviously, I want to pay very close attention to the RSI. If this pushes back above 70 or on the RSI, that's significant. I will also note, however, that volume has been extraordinarily low for things like this in recent days. We had a low volume push on the last 2 days, but it was more buying than selling. And now as we continue to see weak volume, but very strong price pattern, we have to be very cautious about reversals and the possibility of profit taking in the next couple of days. That's why I recommend paying very close attention to the RSI, the Relative Strength Index, which is an indicator built around price momentum, while the MFI is price and volume. The OILU had broken down. We talked about that. The FAZ right now also telling us something significant. Huge move down under its 20-day moving average, and this was kicking in at the beginning of the month. We've had a big move here under the 200-day, now pushing down to the 100-day. And why does this matter? Because this is the financials. This is the regional banks. This is what's going on with the large financial institutions that will be reporting earnings soon. And in addition to that, and why this is so important, it is this feeling of, maybe we start to see some people start to look around into the BDCs, start to see maybe there's some value here. And then hopefully, in a lot of terms, maybe this helps alleviate some of the pressure in the private credit space for now. That is not going away. I've written extensively about what's going on in the insurance industry, but for now, maybe we can all take a little bit of a breath. It has been a lot of tension. This has been a very tough time for the better part of a month and a half. And obviously, going back to January 28th, that was the last time that we had a positive signal. We went red and we pulled back. And basically, my point is, this is what we're looking for. When we have a sell-off like this, we start at 695 and our buy-in or our momentum returns somewhere around 660. That's significant. That's a 5-6% downturn of exit to entry. So, the positive news here is that we do have a relief rally. The question is, how sustainable is it? Ed Yardeni saying we're going above 7,000. I don't know, but I will be looking specifically at these technicals. I remain in the choke points that I continue to hold. I continue to maintain that portfolio because, again, the combination of inflation and yield is what I'm looking for. I'm not chasing a ton too much into the AI space. I have a little bit of exposure to it, but I would rather in this environment where it's very clear that there are liquidity challenges still coming on the horizon, I would rather own exactly the types of things that I talked about in the Hedge of Tomorrow report rather than trying to chase and speculate around a lot of these higher beta stocks that are, to be very honest with you, subject to reversal if the thesis on liquidity of what Alden and Howe and Johnson and a large number of other people who are focused on the plumbing of the markets are suggesting could potentially come in the next couple of months. All right, but that said, FAZ, FNGD, playing out exactly how, these signals tend to align. We saw that happen, obviously, in the last 24 hours, 48 hours. Stuff that's flying this morning, look, it's all consumer cyclical. It's a lot of the tech, right? We're getting a huge bid on NVIDIA, Tesla, Intel. Micron's up big. Delta's up big. Airlines and cruises are going to obviously rally on the back of a lot of things. And I will note, so long as momentum is positive, if it stays positive, there's going to be a lot of room to run in names like Carnival. These are companies. CCL aligns with WANT, which is the triple bull ETF on consumer discretionary. Consumer discretionary, from a momentum perspective, can run. And it can run pretty fast, possibly pushing back toward those levels that we saw back in November. Again, you see the type of rebound that we saw in 2025 after the stimulus from Japan. That's significant. You could see a potential rally here that lasts a week and a half course, some of these names like RCL and CCL, and even a name like Tesla. Once again, very strong ties to the consumer cyclical ETF, WANT, which is the triple bull ETF around that. On top of that, Hynex and Samsung getting a big move. This is significant. Hopefully, we see the alleviation of pressures in the helium markets. But once again, it's one day, it's one headline. We'll see what happens. Shell, BP, XOM, defensive names are getting trimmed. The VIX is obviously getting smashed. Gold miners are kind of hanging out. It's upstream, Halliburton, SLB. Interesting to see that happen. You know, I got a name like BORR Drilling, which we've been focused on in recent days. BORR saw significant insider buying recently after a purchase of some platforms in Mexico. But once again, you would actually think this would be rallying, I believe, because of its exposure to the Arabian Sea, but it is what it is. Upstream names like Halliburton, again, they're going to get beaten up today. A lot of speculation was pushing in, but as I note, again, a lot of this stuff kind of peaked last week. It's important to always pay attention to the MACD. We'll see if this stuff does pull back, because I actually would be pretty content to try to start buying some of these names if there is an overreaction to these headlines, because once again, the upstream will benefit if this all falls apart. But I want to be able to continue to look for opportunities around these key moving averages if we find ourselves there. ConocoPhillips taking it on the chin a little bit. Occidental, Devon Energy, all expected. Delta, $2 billion fuel hit just vanished, basically, right? That 16% decline overnight. Suddenly, the fuel hedges that people didn't want to talk about are looking genius. Stocks up double digits pre-market because analysts are scrambling to redo their models. Watch for updated guidance, fuel cost sensitivity tables, and how fast United, American, and Southwest try to rally with them. In addition, the AI trade just went massive, right? Samsung record quarterly earnings. HBM memory demand is unprecedented. SK Hynix 12% overnight, guided on AI server orders. And Micron just continues to run. Micron was the driver of this market holding up over the last couple of weeks. You saw a significant pullback in the Mag 7, but Micron was one of the top 4 drivers of the S&P holding up and not going down significantly. Exxon, I believe, was the top player in that, but Micron continues to move higher, continues to make a big push, and continues to showcase that this AI trade remains very, very real and is not going anywhere anytime soon. Finally, I did talk about SpaceX. SpaceX wants $1.75 trillion, which, okay, at some point we're going to be talking about real money. That's the target valuation bankers are floating for an IPO. For context, that would make it bigger than Berkshire Hathaway, bigger than Tesla, and bigger than Meta. Starlink subscriber growth, Starship cadence, and defense contracts are the 3 legs of this stool. If even half the numbers are real, this is the biggest listing of our lifetimes. There is no timeline, no filing, just vibes and leaks and rumors. But this is going to pull capital from other places in order to fill the bucket. There's going to be a monstrous amount of speculation around this IPO. I don't know anybody who doesn't want a piece of it, at least. And the question is, you know, when we get to the backside of this liquidity cycle and we start to have to see some sort of policy response and that bucket fills back up and there is a theme, right? So in 2020, the big theme was at-home stocks. In recent years, it's been AI. Does space become the next the next frontier for momentum stocks? Entirely possible, but also at the same time, it kind of feels a little South Sea-esque. Just gonna say that. Jefferson spoke, vice chair of the Federal Reserve, leaning slightly dovish overnight, said the policy stance can respond flexibly to inflation progress, basically saying, guys, we're making it up as we go along. If oil stays down, rate cuts odds will go up. Okay. The FOMC minutes drop at 2 o'clock today. The market is hunting for any hint that the committee discussed an insurance cut. The curve is already pricing more easing into the year end than it was 24 hours ago. San Francisco Fed Chair for Fed President Mary Daly will speak at 1 o'clock. She's something. Expect some curve gymnastics in the 45 minutes between her mic and the FOMC print. Bitcoin and gold are both up today. This isn't that complicated. Dollar is down, liquidity improving, collateral quality improving, dollar soft, yields down, collateral multiplier. Okay. So this is a big win for repo, by the way. Bitcoin clearing 72,000 intraday. Remember when momentum broke down last time? This is a very important thing to keep in mind when it comes to this reading over here. When this is positive versus when this is negative. The last time that this went negative, and I'm just going to pull up IBIT, which is the Bitcoin Share Trust. When did that go negative? January 28th. What happened the next day? Well, IBIT went from 51 to 35 in a week. Okay, Bitcoin went from the mid 80s down into the 60s. Something broke relatively quickly when we had that signal flip. So if our signal is turning now, and if it can be sustainable even for a little bit of a period of time, remember, I have compared this market to what transpired back in 2022. And this is kind of how it feels. So back in 2022, we started with a negative momentum event. We had a positive print on something. We squeezed. We sold off. We squeezed. And that came after the Fed meeting in March 2022. We squeezed. We sold off a little bit. We had a pop. We had that 1% pattern. We flushed out. We squeezed. We sold off. Largest hedge fund sell-off in 15 years. We squeezed through the summer. Everybody was scratching their head. Powell spoke in Jackson Hole, and we cratered. And this is the gilt crisis. If you pull back, you notice lower highs, lower lows the whole way. Okay. So these headlines that are happening, remember, and the persistence of what's happening with liquidity and the concerns that we have about the broader market right now, dollar down. But anytime that we get some sort of event, the dollar becomes in high demand, as we just witnessed the lack of dollars, the dollar shortage that was persisting across the global system. So right now, as we look at the current state of affairs, we have this squeeze up. Great. Okay. The big question now is what happens as we move deeper through this cycle. Well, right now, as we see Bitcoin moving higher, if we can continue to see some level of sustainability, Bitcoin should by default benefit from the continuation of trend. And so long as momentum remains positive, and if it stays for a while, which I wouldn't be upset about, well, obviously that is going to benefit anything that is tied to the liquidity trade, and Bitcoin is tied to the liquidity trade. So if you're going to speculate around IBIT, and here's a trade idea for you, simply buy back at the $39 call, go out, I don't know, a couple of weeks, and then just sell a call to the upside and just look for a spread. IBIT obviously getting had saw some solid inflows. Ads did a lot of ETFs in the Bitcoin space in recent days, going back to the start of the quarter, larger rotation. But this is kind of where my head would be if you are more of a momentum style trader. And if this can remain positive and start to show positive moves on the equal weight at the same time that we see continued strength in our daily pulse numbers, +9 and +23, then yeah, that basically benefits anything that is not tied down at the moment. But again, as I said, I'm expecting the other shoe to drop at some point. I'm just going to enjoy the relief rally while I can now. Obviously, I've been maintaining my positions in gold, and obviously was buying silver and selling spreads on silver back when it was in the 60s. I still remain bullish on silver. I still think silver is going to continue to move higher. And any time that I'm able to accumulate down at the 4,500 level on gold and somewhere in the $70 range on silver, I'm going to take it all day. But we will continue to focus on this as we can the rest of the day. We had NBA mortgage applications this morning. I haven't seen it yet. The EIA weekly petroleum status at 10:30. Fed President Mary Daly. Please don't make Mary Daly Fed Chair. She will be the last voice before the minutes, and of course the FOMC at 2:00. I'll be back with a report on the FOMC minutes later today. Set your alarms, fill your water bottles. Today has layers, and of course, be looking for profit taking this morning as well. Watch those 3-minute charts. Pull up the SPY. Here you sit right there. There's your 3-minute line, and watch the 20 and 8-minute adjusted, or forgive me, 24-minute and 60-minute lines. That's your green 8 and your 20. And if that cracks and rolls over, you just trade the SPY to the downside for today. But right now, this is a relief rally. This is, going to be a lot of short covering that's going to happen at 9:30 today, and we're going to take it from there. I hope everybody has a great trading day. Remember, all of these tools that we have, right, are available if you're a member of Money Printer Pro, all the breakout stocks, breakdown names. And as I noted, technology turning positive the last 2 days, and that Russell number turning positive, again, showcasing us and telling us that money was betting on this yesterday. And that's kind of the flow that we do need to follow. Really, the first time that we've been able to visualize a switch like this. So, showing that it's doing what it's supposed to be doing. And it's also interesting because even though I interpret this data, I still, of course, have that natural bias. And one of the key lessons moving forward for everybody is to follow the data set and to make sure that you are seeing in real time how momentum is working, because again, the clues have been there for a couple of days. Energy was already breaking down. And I'm not saying that there's any insider knowledge. I'm just stating that there is very clear flows that were starting to accumulate ahead of yesterday. And it really had started to show up in the data set early on Monday morning. All right, everybody, I hope you have a great trading day. I will catch up with you. I am heading to North Carolina for 2 days for a business trip, but I will be available as always. Take care, and we will see you on the other side. Stay positive.